I have Bankole Odusoya, who's the head fixed income at UBA, to talk us through that market. Good morning and thanks for joining us. Now, how's the debt and currency market trading the falling oil price this morning?
Good morning. At the debt market, it's been quiet, majorly for the first reason being system liquidity being low at about 200 billion naira. The second reason simply is the sell-off we experienced since Monday. Since the crash of crude oil, we've seen most of our FPI, that's the foreign portfolio investors, participants in this market, sell off on bonds and on treasury bills. The market is quite shallow now, given that we're out of about 46 treasury bills maturities, just about 5 are being traded. Rates, that's discount rates, have moved as high as 16%. This makes it more expensive for the central bank to mop up, should they try to mop up more liquidity today. Of course, it's Thursday. We expect the central bank to mop up some of the matured funds that came in. 85 billion matured for Nigerian treasury bills issued by DMO, and just about 65 matured for OMO as issued by the central bank. We expect the central bank to mop up some funds today, but it is delicately poised, to watch or see where the closing rates will be today, given that secondary market rates are now at 16, and the last time OMO was issued for 1 year, it stopped at 12.99. So basically, it's a bearish market where it's become more expensive to mop up liquidity or to even borrow going forward, as we see.
Now, what's the outcome of yesterday's Treasury bills auction, of course, and how will that move sentiment in today's trading activities?
Okay, the NTB auction, where just about 86 billion was sold, 70 billion for the 1 year, and it stopped at 5.3%. We've not seen major movements there. And the reason simply because of the amount on offer not being humongous yet. Should the DMO continue issuing this modest amount, we expect rates to remain steady at 5% level for the 1 year. But should the debt management office consider borrowing more locally and issue more, we expect rates to go up and prices to drop for these securities. On the bond side, there's been a guidance and change to the amount on offer on the bond side. The DMO plans to reissue 2023 bonds, but just 15 billion is planned to be reissued. The initial calendar showed they will plan to raise about 40 billion of that, but it's been revised downward. And they have stopped the plan to reissue 2029 and 2049 bonds, thereby pushing the maturities of what they plan to offer to 2035 and 2050 bonds. The volumes are also reduced compared to the initial plan they had, so we expect rates to be moderate. But the secondary market is still quite bearish, and the participant going to the month auction, which will hold at the end of this month, will be looking for more, that is, charging for more to invest in these government debts. We expect rates to go back up slightly.
In 30 seconds, Bankole, would like to know how the Naira is trading at the moment.
There's some form of bullish run there. There's demand exceeding supply. We know that the central bank continues to intervene on a weekly basis. Even on the BDC end, they are selling every day of the week besides Tuesday. We expect this to continue, but rates are as high as 375 on the streets. That's parallel market. But basically, it's demand exceeding supply for now.
Bankole Odusoya, head fixed income at UBA. Thanks for speaking with us. Well, it's time now to turn our attention to the Nigerian equities market, where the free fall continued yesterday by 3.35%, leading to a total loss of 425.2 billion naira off the equity capitalization. Eddie Young Ewang is ready to tell us what went down yesterday. Good morning, Eddie. These are certainly not happy times for investors at the markets, right?
Good morning, BC. Well, you're right. These are not happy times for investors. So what happened yesterday? The coronavirus-induced sell-offs reached a new low yesterday, and that dragged some global markets to the bear territory. And the market in Nigeria was not left out, because we reached new lows of 23,527.75 points. Like you said, we lost about 3.35%. yesterday in the market, and the equity cap was down by 425 billion naira to 12.284 trillion naira. Now, BC, what's just going on is investors in Nigeria are still fretting over what's happening in the global economy. Now, just to give you a picture representation of the level of sell-offs in the markets, look at this yesterday. We saw 1.39 billion shares yesterday traded worth 17.64 billion naira. Now, of this 17 billion naira, 7 billion accounted for GT Bank, 5 billion was due to sell-offs on Zenith Bank, and then 1 billion was, attributed to FBN Holdings. In all, we saw about 7,150, deals yesterday. Now, all the sectors we tracked were negative, apart from the insurance sector, which was up by 2.24%. Now, like I said about the banking index, we saw losses from all tier 1, stocks, apart from UBA, which was up about 9 points, over 9%. So what just happened in UBA yesterday was investors taking position, and taking advantage of the lower prices on that stock. The consumer goods sector was down. That was due to Cadbury, Nestle, Nascon, which shed, more than 9%. Industrial goods was also down. Dangote Cement lost 10% in the market yesterday. And as we know, when Dangote Cement sneezes, the market feels it. So that's what happened there. And then the oil and gas sector was also down 0.70%. Only 2 stocks on that counter were down, and that was Corn Oil and O&O. We move over to the unlisted securities markets now, and we see that counter was up about 0.13% yesterday. That market saw marginal losses of 0.03%. The market cap is at 508.76 billion naira. In all, we saw about 713,000 deals, worth 18.45 million naira traded in 8 deals. Now, the unlisted securities markets hasn't been, active recently, but then the gains yesterday are welcome, at least some positive news from the markets. We move over to the fixed income markets now. The bonds market was bearish yesterday as, average yields increased to 11.2%. Now, we saw expansion in across the board. You can see here that there was a lot of movement on the February 2023 2028, I beg your pardon, date, and then the April 2049. In all, there were about 23 deals worth 5.1 billion naira. Now, BC, I said the Nigerian Treasury bills market has been quiet. Now, look at this. No deal, no action, nothing in the market. Investors were paying attention to the primary market auction yesterday, which the CBN allotted 86.3 billion naira, with swap rates of 2.49%, 3.78%, and 5.3%. Now, I would like to say that these rates are lower than the rate at the previous primary market auction, but hopefully today, investors will have time to react to that. So hopefully we'll see some market, some activity in this market.
Oh, we'll wait to see how it all plays out at the end of the day. Thank you, Eddie.
You're welcome.
And we'll be talking to Rotimi in just a moment to see how the markets are faring. It's a new trading day at the Nigerian equities market. But let's get a sense of trading, how they're faring this morning. And Rotimi Fakayejo, a stockbroker, joins us to give us a sense of what's happening today. Now, good morning, Rotimi. The market continues to feel the hit, but tell us what the numbers are looking like so far.
Well, the numbers are not looking good yet because the all-share index is presently 2.17% down, and some stocks are actually trading at their minimum for the day. The other side is unexpected because the way it is right now, it is not local to Nigeria for what we are seeing, and the after effects of what is presently happening is more far-reaching for Nigeria than any other country, vis-a-vis the global the drop in the global crude price, and also the impending possibility of the naira being devalued. So everybody is really, really apprehensive. But one thing that is very key is that as at this time, one question we should be asking ourselves: have we seen this kind of thing before? Not coronavirus, but we have seen markets come down like this. And after the old period, we have seen markets come back again. So the only thing is panic has really set in and is actually making the market to come down. So what I would advise most people, with Zenith Bank at 10.85 kobo, I believe it doesn't make any more sense to keep selling again. Rather, if one has money and you have a long-term fund, that you can actually tie down in the next 1-2 years, then you have a lot to show for it thereafter. So it's basically not really right as things are presently.
Oh, some investors appear to be taking advantage of the lower price stocks, which led to nearly a balanced market breadth of 20 losers and 18 gainers yesterday. Are we likely to see this trend continue?
Well, I think we are not going to see the prices of stocks come down to zero or lower than what I've actually said maybe earlier in the week is that by the turn of the week, we definitely will see a lot of sanity returning. With Zenith Bank at 10.85 naira 85 kobo today, I think it's quite an unusual price. And with a dividend yield of about 2 naira 50 kobo, that means investment in that stock will yield you 25% in the immediate. And if you leave that investment for the next 1.5 years, 2 years, you definitely will have a recovery of your investment fully. So I believe strongly that people should just take away panic and let things be as it were. It's very bad all over the world, but definitely the world has not come to an end. And I believe everybody should have that perspective.
It's good to know that the world has certainly not come to an end. Rotimi, many thanks for sharing your thoughts with us this morning. And we'll see how it all plays out in a few hours from now. And that's where we wrap up today's show. Thank you so much for watching. We'll be back again tomorrow. I am Bisi Adebayo.